What's going on, everybody? Michael Silva here. Uranium Stocks. They have been going completely nuclear. Is there more upside to go? Well, in today's interview, we're going to find out. We're bringing on Amir Adnani, the professional, the CEO of Uranium Energy Corp, to really help us dive into this industry, to really discover whether or not this is just a quick fad or if this is a real change in trend taking place here for uranium and ESG investing. Fun fact, ESG investing, according to Exploding Topics, that search term alone in the last 5 years is up 830%. We got a lot to talk about in today's episode. Let's get into the show. Amir, before we get started, first and foremost, for those that might not know exactly who you are, may you give us just a little bit of a bio background of yourself and what it is that you do?
Hey, thanks, Michael. I'm an entrepreneur. I've been involved in the natural resource commodity-related businesses for about 20 years now. And it has really been focused on starting and building companies that are active either in uranium or gold. So I like to call them the two yellow metals. And with respect to uranium in particular, I founded a company called Uranium Energy Corp 16 years ago, where I've been the CEO since inception. Grew that company in its first 5 years from a business plan to a uranium producer in 2010 when Fukushima happened, which was a real setback for the industry and challenging times. We switched our business and developed a new strategy around being a real aggressive acquirer and focusing on the fact that there was a contrarian market for uranium and it would lasted a long time. And during that time, we tripled the size of our business in terms of resources and continued to really build out our platform. Along the way, I founded a company called Uranium Royalty Corp, where I'm the chairman and UEC is the largest shareholder. There we're bringing some much needed financial innovation to the uranium sector. The royalty and streaming model has proven to be a very effective way of providing capital for mine development in the precious metal and base metal sectors. There was never a dedicated company in the uranium sector implementing the royalty model. We brought that with Uranium Royalty Corp, and it's been a great performer for our shareholders. You know, we IPO'd that company about a year and a half ago at $1.50 a share. I think the stock today closed over $4, and it's the only publicly listed royalty company in the uranium universe. And I'm very active as the founder and chairman in the gold sector of Gold Mining Inc. and Gold Royalty Corp. So very much passionate about entrepreneurship, passionate about the two yellow metals, and passionate about the role that nuclear energy and uranium are playing and should be playing in our energy mix moving forward.
Thank you. Before we hop into more about Uranium Energy Corp, can we learn a little bit about the uranium industry? Perhaps, where is nuclear energy used, both domestically and internationally? I'll hand it off to you.
The main and really the only application of uranium that we should talk about, which is what the whole industry is built around, is the consumption of uranium in nuclear power plants to generate electricity. And so demand for uranium starts and ends with the fact that there are 440 operable nuclear reactors in over 30 different countries globally. What do they need uranium for? It's the primary fuel that, again, is used in a reactor to generate emission-free baseload electricity. Typically, these are 1 gigawatt reactors. They're powering large cities, and they're contributing to an important part of the energy mix. In the United States, nuclear power is responsible for 20% of our electricity. Said differently, 1 in every 5 homes in America, when you flick the switch on to bring on power in your light bulbs, that's powered with a nuclear reactor using uranium as its primary fuel. In France, that number is 75% of the electricity. So 3 in every 4 homes in France is powered by nuclear power. And over the last 4 years or so, there have been over 50 reactors, new ones added to the grid. Another 52 reactors are under construction right now globally. And so the story is very much also about an industry and a sector that is growing just alongside the growth that we're seeing in population worldwide, and the fact that electricity is one of the fastest growing segments of the energy market. We're driving electric vehicles. We're consuming and utilizing more and more electricity. And we simply can't meet our electricity needs by burning hydrocarbons, because that's creating greenhouse gases, and that's causing a whole other problem and having a real human impact cost for us. So nuclear power is definitely kind of the way, I think, to think about a path forward that allows us to meet our needs for electricity around the clock, because again, it has the ability to generate electricity 24/7. It's as close to 24/7 as it gets. It has a very high capacity factor. Renewable sources of electricity generation like solar and wind do not have the ability to work at 95% of the time, or 24 hours in a 24-hour day. And so when you think about the qualities of nuclear power, that's the way to, I think, get your mind wrapped around the demand for uranium. That's what it is. And where uranium comes from is mines. It's a mineral that has to be mined like gold, copper, silver. And so it's in the Earth's crust. We have to find it in economic quantities that could be permitted. We need to be in jurisdictions that have a regulatory framework around how you permit a uranium mine, and how it gets mined in terms of the various types of mining, the grade of uranium, and all those other attributes basically makes it an extractive industry. So that's the supply side, and then the nuclear power reactors making electricity are the demand side.
Awesome, thank you. In my channel, I talk a lot about spotting trends, and well, uranium hasn't quite been in an amazing trend as recently. It's been in a pretty nasty bear market for quite some time. We're starting to see headlines change. We're starting to see spot price go up. One thing that I like to look for and decipher between a fad and a trend is I look for social significance, economic significance, and political significance. Can you maybe give us any insights to what you're seeing, whether socially, economically, or politically unfolding here that could benefit the uranium industry?
All the above. I mean, first of all, just starting strictly with, let's say, just the dollars and cents end of it. We're a company that's publicly listed. We have tens of thousands of shareholders. A year ago, our share price was over $1 per share. Today, we're approaching almost $3 a share just in the span of 12 months. That's an interesting barometer that speaks to momentum and interest. Politically, in Washington, D.C., for the first time, we have bipartisan support for nuclear energy. And for the first time since the 1950s, since the Eisenhower administration, the United States government has come out with a program to purchase physical uranium to build government stockpiles. Because in the US, we don't mine any uranium today. Yet the US consumes uranium to generate 20% of its electricity. It's the largest consumer of uranium in the world. Again, we don't mine any in the US. So the government now, from a policy point of view, views this as an energy security concern, wants to come out and start purchasing uranium. And this National Uranium Reserve Program is to be implemented later this year and continue, hopefully, over the next decade. That's what's being talked about and proposed. So that's on the political policy side. I think from a social conscious point of view, the trend of ESG investing, investors that are placing a huge amount of emphasis on the E in ESG, environment, are recognizing that, again, in order to do the things that over the next 15 years or out to 2050 can support the net zero pledges that governments and companies are making to reduce our carbon footprint and reduce global temperatures, we have to really think about ways of generating electricity and energy that doesn't emit emissions. To go net zero, we have to have nuclear power in the mix. That's the conclusion of people, entrepreneurs and billionaires like Bill Gates, who has co-founded a company that's building small new reactors, modular reactors, a company called TerraPower that Bill Gates is the co-founder of, to countries, I mean, state-owned companies of Russia, China, South Korea, United Arab Emirates, which is an oil-rich country, just brought on their second nuclear operating unit that they've built in that country. So the sense around the ambitions of net zero and to be a net zero country or company out by 2035 or 2050, whatever your timeline is, almost immediately bring you to the doorsteps of nuclear power. because it is the only form of large-scale electricity generation that is emission-free, and it's a proven technology that has a 40-year track record as in civilian use.
Let's talk recently about the current price action of uranium and really what's been going on. I saw you recently tweet about a hedge fund that is making a big bet that was part of the Amazon.com MGM deal. So there's a lot of interesting things taking place, including the younger generation. Maybe it's because of this recent spike, but the younger generation also seems to be more interested as well in investing into uranium industry.
Yeah, I mean, first of all, look, you touched on it in your earlier comments about how we've been in a long bear market for uranium. So people have to remember that this is an industry, nuclear energy and uranium typically evoke the wrong emotions in the sense that sometimes it could be hate, it could be an emotional reaction to challenging parts of the history of nuclear energy with Fukushima or with 3 Mile Island. But at the same time, we also had an oversupplied market from 2011 to earlier parts of this year or last year, where the uranium market was just oversupplied. And as a result, uranium prices were very depressed. And so we were in one of the longest bear markets of any commodity. We were in uranium, okay? Even right now, if you look at Google search results for uranium, it still is not being widely recognized or picked up. And so I think this conversation, or people even listening to this right now, are still very early to what is happening in the uranium sector, which is we're coming out of a decade-long bear market and we're reacting. I think the uranium price is really trying to react to the fact that there's a structural shortage of uranium. We simply consume more uranium at 190 million pounds per year than we produce at 130 million pounds per year. So we have a structural deficit. And in any commodity, if you consume more of any commodity than what you produce globally, that causes the price of that commodity to appreciate and go up. Just in the last 2 weeks, we've seen an over 25% increase in the uranium price, making it one of the best performing commodities. That is driven really by things that happen over the longer term picture. Again, a decade of underinvesting in the sector, big mines that have been shut down, and production curtailment that has been taking place since 2018. But it needed a catalyst, and the catalyst has really emerged in the last couple of weeks with the emergence of something called the Sprott Physical Uranium Trust that has really introduced more participation in the physical market for uranium by financial players. And Anchorage, that you referred to, that article that I tweeted, Anchorage Capital is a big $20 billion assets under management fund that for a long time was studying the uranium sector and trying to figure out, how do we get into this? Jason Siegel, who runs the uranium book and practice at that fund, I'm speaking to him on Friday. I messaged him late last night telling him, just, hey, man, you're killing it. These guys, as that Wall Street Journal article reported like a month and a half ago, went and bought, according to the Wall Street Journal, say a couple of $100 million worth of uranium at less than $30 per pound. And now uranium is over $40 per pound. So they're killing it, right? They're doing well over there. And that's interesting. And that's where the financial, now when you get hedge funds who smell blood and they can see they can make money in a tightly traded commodity like uranium is. It's not widely participated like gold and silver and copper are. And so you get some influx of financial players entering the physical market, and it can cause big moves. And we're already seeing that. And in fact, that's what happened in 2006, 2007, where the uranium price went within a span of a year from less than $30 per pound to $140 per pound. So you can expect big moves in the sector because of the dynamics around how the physical uranium market is so thinly traded and it's tightly held. And I think this is just a fascinating thing to watch and see how this physical market and price discovery for it unfolds. At $40 per pound uranium, I can tell you, it's not going to incentivize the development of new uranium mines. Most uranium mines that are on the drawing board or being proposed with an economic study or pre-feasibility study are looking at $50 to $60 per pound uranium as the incentive price. And that alone shows you that the uranium price has lots more to move here before it can get to levels where new production could be incentivized, number one. And number two, compared to where uranium prices have been in terms of their all-time high of $140 per pound, or their 2011 high of $70 per pound, at $40 per pound, again, this price is really just coming out of a long bear market where it was just really stuck in a rut, and now it's starting to make some headway at a time when really, relatively speaking as well, the whole world, the broader stock market, everything is trading at an all-time high. And here you have a commodity that's coming out and it's still probably sitting at 26, 27% of its all-time high. It's quite fascinating setup for uranium.
It sounds like the perfect storm. And I really want to know how Uranium Energy Corp fits into all of this. Before we get more into that, I have a question from an audience member that I found to be quite interesting, and I wouldn't know anything about this. He asked, why do you think that the utilities and producers aren't making more moves to start to stockpile this short-term uranium to front run, I guess? Do you have any insight into that?
Well, I can certainly comment on it from what I've seen as someone who's been directly in this industry since 2004, 2005 timeframe. And I could tell you, we saw the exact same thing in 06. In 05, 06, the uranium price had been in a long bear market, preceding it for about 10 years, very similar to the setup now. And it was the hedge funds and it was the financial players that drove the market initially from sub $20 per pound to $40, $50 per pound. And then all of a sudden the utilities entered the market and drove it to upwards of 90 to 100 to north of $100 per pound, and didn't just drive it there. Signed long-term contracts with prices pegged at those higher levels for multi-years to come. Now, how do we know this? There's clues that we can point to. For example, look at Tokyo Electric Power and Cameco. Tokyo Electric Power is a big Japanese utility that got in trouble when Fukushima happened in 2011, and it tried to exercise force majeure with Cameco, a big producer, to get out of contracts that it had signed with Cameco for uranium to be delivered to them at $90 per pound. And so what's fascinating is to answer your audience's question, one thing we can just look at is this habit of utilities being late to the party seems to be demonstrated in previous cycles, number one. Number two, now let's kind of deliberate a bit over why they're late. Okay, number one, the cost of a pound of uranium makes up less than 5% of the overall cost to run a nuclear power plant. So arguably, they're not price sensitive. I often say that when the uranium price was over $100 per pound in 07, and utilities were buying uranium at over $100 per pound, no one in the country, and I'm talking in the US, got an electricity bill that they found to be offensively high in electricity costs. There was a New York Times article that talked about the electricity costs going out of control being generated by nuclear power plants. In a gas-fired power plant, natural gas as the raw feed for that plant, that type of generation, could be north of 50% of the overall operating costs, not with a nuclear reactor. So there's the dollars and cents end of it to begin with, number one. Number two, I think when you talk about utilities, the function or role of a fuel purchasing manager is within a very large organization, and large organizations simply are not really nimble or act very quickly. And in previous cycles, you've had, and I think complacency sets in. I mean, the last cycle that we had where the uranium market was really moving was 2010. It's 2021. Some of the guys that saw that cycle are retired, they're gone. Perhaps some of the people running fuel management programs today at utility companies that have been in it for the last 10 years have never seen an upcycle. Complacency sets in. You just think, cheap uranium is going to be around and available. So all those reasons combined are my thoughts as to, and observations as an industry participant for the last 17 years or so, as to why the utilities tend to perhaps be not the drivers of price appreciation. And it typically tends to be financial players. And it's always been that case, at least in the last 17 years. And I think this time around, we're witnessing the exact same playbook unfolding.
Let's get into Uranium Energy Corp. You're the founder of that publicly traded company. What do we need to know about Uranium Energy Corp?
I would first and foremost by talking about credibility and proof of concept. By credibility, I mean the fact that with uranium is no doubt developing into becoming already as a top performing commodity, and I think it's going to continue to grab headlines and be a hot space that people are going to want to be in. In that environment, you're going to get a lot of companies that are going to want to just show up at the party and say, hey, we're a uranium company as well. I saw it personally in 2005. 2005, I built a new company that joined at the time in a sub $20 per pound environment. We were one of 20 companies in the world looking for uranium. By 2007, there were 600 companies worldwide looking for uranium. And so I don't think you can, really buy credibility. And our credibility is the fact that we've been 100% focused on our uranium business for the last 16 years, consistently focused on acquiring and developing uranium projects. We have the former United States Energy Secretary, Spencer Abraham, as the chairman of our board. There isn't another uranium company on earth that has a former US Energy Secretary involved in any capacity. The current president of the Uranium Producers of America, the Industry Association for Uranium Miners, is the executive VP of our company. And as a company, we actually built and mined uranium at our South Texas operations before shutting the operations down due to the falling uranium market that occurred from 2011 onwards. So credibility, proof of concept, and that is demonstrated by the fact that we're a past producer. The people that we have involved, no other company can say they have. And we've spent 16 years really building a platform that includes fully permitted uranium mines that are on standby, that give us the ability to restart mines and get into production faster than really most companies. Most projects in the world are not fully permitted for production, which is, by the way, kind of a bullish point here, because it goes to show you, even if the uranium price spikes tomorrow, the ability of companies to respond to that isn't overnight, isn't flick of the switch. This is a very permit and license intensive industry. It takes 7 to 10 years just to get the permits. I know that firsthand because I've obtained 4 permits and one of the only CEOs that is actually permitted, not 1, not 2, not 3, but 4 different uranium mines. And in business-friendly states like Texas and Wyoming, it can still take up to 7 years. That to me is a barrier to entry. So back to the point about why Uranium Energy Corp. We have the fully permitted projects. The barrier to entry is going to be high when you talk about which companies can actually produce uranium. And ultimately, what we've done over the course of the 16 years is we've built quite a bit of breadth and depth to our portfolio. We have projects in 5 different US states. We're very focused on in-situ recovery, which is a low-cost and environmentally way of mining uranium. Our projects that are permitted for production are in states like Texas and Wyoming with a long track record of this style of mining with in-situ recovery. We have a processing plant. We own our own fully built and operational processing plant to process uranium, one of only a handful of such facilities in the country. And finally, balance sheet strength. Our balance sheet is strong. We have over $150 million in cash, physical uranium, and uranium equity holdings. So that's our strategic equity stake in Uranium Royalty Corp that I was mentioning earlier. And the reason we own physical uranium is because when we saw the uranium price earlier this year at around $30 per pound, which is in fact lower than what the all-in cost for most global miners is, we saw that as an opportunity to buy uranium and actually hold it in a warehouse in the US and have it really be giving us balance sheet strength, which it does. It's already gone up. We bought it at $30 per pound. Today it's over $40 per pound. Our view was that it's going to have more value than cash. So we're going to put a segment of our cash in physical uranium. That's already paying off. And so as the uranium price appreciates, we have immediate impact to our balance sheet, which contains over 2 million pounds of physical uranium that we've contracted for. So again, I don't know of really any other small cap company that has so many different uranium focused features about it. The credibility, the proof of concept as a past miner, the people that are involved, ownership of physical uranium, ownership of a uranium processing plant, ownership of 100 million pounds of uranium in the ground, and 4 fully permitted uranium projects that gives us the ability to get into production quickly on US soil, which means we can sell to US utilities or the US government, which now has a mandate for the next 10 years to buy newly mined US origin uranium for the National Uranium Reserve of the United States government.
Wow. It really does sound like the perfect storm is brewing. We went over the trend, both social, economic, and political significance. And one of the things that I look for when I look to invest in specific companies is one, the team. And you mentioned Spencer Abraham, and I don't want that just to fall short and that kind of just be overlooked by anybody of how big of a deal that is. And then second, I like to look at the, how the share structure is kind of broken up. One, I want to see if you have skin in the game yourself. Are you investing in this company? And then who else is?
Yeah, absolutely. So first of all, if you just look up the holders list of our company on Bloomberg Terminal or Yahoo Finance, or I can just tell you, it includes some of the biggest institutional investors in America. It includes names like BlackRock, JP Morgan, Fidelity. It includes commodity-focused investors like Sprott Asset Management out of Toronto, which coincidentally is also the group that has launched this physical uranium trust. Extract Capital, another well-known mining-focused investor, Li Ka-shing out of Hong Kong, who's one of the wealthiest individuals in Asia. And then you see my name as a top 5 shareholder of the company. You see the name of Spencer Abraham, a former US Energy Secretary, as a top 10 shareholder of the company. So bottom line is that, yes, not only is the management team been here from day one, it's one thing for me to say also that I have skin in the game, but it's another thing to also really show you. I've been at it for 16 years. I'm committed. My team is committed. We've put not only our capital to work and have the equity skin, but we've put a good chunk of our life into this. And when you talk about the amount of time as a company and as a team we've spent building our platform, believing that a bull market in uranium was only a matter of time. It was a when, not an if. And preparing and building for it without any distraction, right? For our focus from day one was we want to build the premier US uranium mining company. And we never deviated from that. We never thought, you know what, let's go look at Africa. Let's go look at Australia. Our focus has been to build the premier US uranium company. It takes time to do that. We've put the time in, we've assembled the people, and we have skin in the game. And that's why we've attracted some of the best institutional investors that are household names. Any public company would be proud to have as shareholders. We have as top shareholders in our company.
To build the premier uranium company, you shared with us some things that you're currently doing, but are there any other strategies to achieve more value that you're looking into, or are you sticking to your current script because it's working out?
No other company, as we speak, has drill rigs on the ground, drilling production development holes for a new uranium project. We have a project called Burke Hollow. It's in South Texas. Even despite the problems with COVID, my team has been absolutely relentless about making sure that in a safe fashion, we get out there, we drill, we develop. We've been drilling since January 26th of this year. We've been advancing one of the largest production areas in the United States today, a new uranium project and a new production area. It's a project that we discovered in 2012. So we are actively developing. We are actively drilling, not necessarily just sitting here and saying, we're waiting for the uranium price to go up, but advancing our projects so that we're that much more ready for production when the uranium price gets to a level that we feel will give us adequate return. And we're looking for the price to be north of $50 per pound to really restart production. But restarting production takes preparation, and that pre-production preparation development work we have underway. We've been committed to this year, and again, no other company is as active as we have been. So continuing to sticking to our knitting, continuing to execute, buying physical uranium, demonstrating that we have quite a bit of leverage to what we believe our company is designed to give you leverage to. And really finally looking at ways of advancing permitting as well. As I mentioned, permitting is everything. If you don't have permits, it doesn't matter if uranium price is $100 per pound. If you can't pull this stuff out of the ground, what difference does it make? And this is one of the most license intensive industries in the world, uranium mining. It's more license intensive than gold and copper mining. And so focusing on making sure that as many of our projects receive their permits has been another priority focus for us. And again, today we sit in a position where you look at our Reno Creek project in Wyoming, which is the largest deposit in the US that's fully permitted, but not constructed yet. So construction ready, fully permitted. That project has a permit for 2 million pounds per year. Our Hobson processing plant has a physical capacity of 2 million pounds per year. At a minimum, we have baseline production potential of 4 million pounds per year with room to grow. And that's meaningful in a country in the US right now where there's no uranium mining. So there's an opportunity here to build the largest domestic producer of uranium, which is an energy commodity. It's a vital commodity. That's exciting. How many, you interview different CEOs from different sectors. How many different sectors did you come across that are as integral as energy is, which is what our industry is? Yet I could tell you that all market share was available to grab because no one else is producing any uranium. That to me is an incredible opportunity. The biggest market in the world for uranium, the United States, gets all and most of its uranium from foreign sources, mainly Russia and Kazakhstan. That's not sustainable. And so a domestic market must be developed. And I think will develop. It used to exist. The US was the largest producer of uranium in the world in the 80s and late 70s. So it really, and supply chains are so important. I mean, who today would disagree that having supply chains of vital commodities or goods that you need isn't important to have in your own backyard, right? Whether you're the consumer or a policymaker, supply chains are everything. And the supply chain for uranium that powers 1 in every 5 homes in America does not exist domestically. And we got to get it from Russia and Kazakhstan as our major supplier. So if you think something's wrong with that, then I think you realize why this opportunity is so big, why I've committed 16 years of my life to continuing to be focused on this, because I really believe this will change. And when it does, our company will lead US production higher.
That's incredible. Amir, I want to thank you for coming on and talking to not only myself, but the audience. I know your time is extremely valuable. How can my audience, one, learn more about you? Can they follow you on Twitter or learn more about Uranium Energy Corporation?
You can follow me on Twitter at Amir Adnani, my first name, last name, uranium price or nuclear fun facts or whatever it is. If you're interested in this sector, that's the kind of information I tweet about. And finally, uraniumenergy.com, our corporate website, where you can get in touch with our investor relations team, take a look at our PowerPoint presentation or our financial filings. I'm fairly available as well. You can call our office, ask to speak to me if you want to pick my brain or just ask me about our company. We're not we're not a big multinational. Look, like I said, the company was founded by myself. We're very entrepreneurial. We're very accessible. And even though the company is 16 years old, we feel like it's a startup maybe, right? And that there's a lot of excitement at this company. And we feel like we're onto something big that hasn't been recognized and realized yet. And that's still really in front of us. And I really think we're ready for it. We've invested in the assets and the people that can really get us to that ultimate goal of being the largest uranium producer in the United States.
I really appreciate that. I can tell you're very excited. I mean, you pumped me up too as well, and I'm sure the audience is going to really enjoy this. So once again, thank you so much for your time and coming on here and letting us know about this industry.
My pleasure. Thank you so much.